And when I stepped away from trading, I was kind of blown away by how much, pardon my French, how much bullshit was being touted through retail traders.
If you're going to try and trade news as a retail trader, you are making life a little
Yeah.
bit more difficult for yourself than it has to be, if I'm honest.
All right. Well, welcome. I said thank you for having us on. Or for having us on. Thank you for coming on my show. I appreciate it very much. You know, I
You're very
talked to you.
welcome.
Yeah, already messing up the interview here. It's like a thing. But
What a start.
if you guys don't know, I talk to Ryan and Michael Brown every morning. Probably because I get up at 3:30 in the morning and no one else is awake, so I at least have to talk to some people, right? And so every morning I listen to their morning show. I talk to them a lot, and even though we joke around a lot, these are two very big professionals in the field, and it's an honor to have them on my show. So let's start with you, Ryan. For those who don't know you, how'd you get into trading? What'd you do early on, and then how did you transition into? Actually, you can answer the question: is it PiQ? Is it PiQ? Is it PiQ? What is it? And then you can tell us how you got into it.
Yeah, well, firstly, thank you for having me on, my dear friend. I should have worn my Carly t-shirt. Oh no!
Yeah, you should.
Oh no!
That's a missed opportunity.
No, sorry, it's PiQ, and there is a story behind that which we won't go into.
Definitely not for the podcast,
started
that
off
one,
as,
is it?
named after a certain Greek god that was known for certain things, but Google that'd be fine. But no, I started off in markets about 25 years ago. I kind of, to be honest, it was kind of my father's friends were all old life floor traders. That was opening outcry when they're throwing their hands around. Used to love hearing their stories and stuff, so I kind of thought, well, this is what I want to do with my life. Unlike Michael, wasn't smart enough to get formal education, so I started off as a runner. So I started off as a runner just as the trading floor was closed. So it was a big room of probably around about 100 traders, but literally just most of them were ex-life traders that just transitioned green. So it's very much that still like trading floor environment. So I was a runner for a couple of years, and then got given a trading account, which was how it used to be back in those days. Like, you would take a job as a runner and then earn your kind of crust, and then eventually someone stupidly made the decision to give me a trading account. No, to be honest, it was, I think, for me personally, it's probably the best environment to be in because I learned so much from those traders and like from these the old school boys, and it was a great time because it was really the start of the big push to electronic trading as the floors were starting to close down and stuff. When I first started trading, I was given my choice on what to trade, and my background, like I said, interest rates and all this stuff had no appeal to me whatsoever. But I've always been a massive fan of news and geopolitics and stuff, so I just floated straight into oil markets. So traded oil, nat gas. I was a market maker for Iceland's me at one point during my career as well, on the spreads and whatnot. That's it. That's the life story.
All right, and then obviously you started PiQ. You got into that. What was the original purpose of doing that, and how did you transition into that?
So basically, as you know, Nick, I'm a very open about mental health and whatnot, and I, have struggled a little bit. Well, I still struggle occasionally. I don't think you ever really get over it. But I'm being fine for a number of years now. But trading for me, I lost the love for it, and it was starting to affect me in multiple ways. So I kind of, after the third mental breakdown, thought, I probably need to tap out on this one. But I knew I needed to stay in markets. I'm addicted to, even just watching markets, being involved in markets. I knew I'd wanted to do something that stayed in the realms of markets and trading. And at that point, it was like 19 years or whatever of being in the professional side of the desk. And when I stepped away from trading, I was kind of blown away by how much, pardon my French, how much bullshit was being touted through retail traders. Because I'd never seen the retail environment before. And it just it was so depressing for me. It was so, sorry, that's not me.
That was me.
That makes a change.
It was so frustrating. It really boiled my blood seeing how difficult it is for trading to start trading anyway. It's a very difficult process. It's very difficult to become a successful trader. And you've got all these retail traders coming into the industry and coming into the, the career, and they're just being spoon-fed absolute bollocks. People do not know what they're talking about. And it kind of broke my heart a little bit. So I kind of said to myself, look, there's enough information out there that's freely available if you know where to look. And that's the difficult bit. So I kind of had this idea with PiQ, and obviously we built the platform now, and that's, it's just undergoing a new UX and UI upgrade. So there'll be plenty more to shout about in the next couple of weeks on that front. But yes, the idea behind it was build a platform, almost like a safe space, if you will, for traders, and with trusted content, because there is, like, Michael's, me and Michael are very good friends. But the reason I started following Michael was because his content is excellent. Now, if you know people that Michael is this, and yourself, Nick, and and the Damn Spring team, if you know where to look, there is incredible value out there. It's just so hard to find it if you aren't guided, and that's that's kind of what I'm looking to do now, is basically just try and help people find actionable information and use content, and because I think it's hard enough anyway. So everyone deserves as much of a chance to succeed as possible.
All right, cool. And then to Michael. Obviously, we have Pickles, who didn't go to school. We have me, who decided he was too cool and dropped out of school. And then we have the actual nerd in the middle. So what school did you go to? How did you get into markets? And then how did you eventually transition to the job you have now?
Well, I did finish school, you'll be pleased to know, but I didn't go straight to university afterwards. I went into the big wide world of work. I think at that point I was almost fed up with studying and getting nothing sort of tangible from it. You get a couple of bits of paper, but actually want to go and earn some cash and apply yourself and actually put things into practice. So ended up at a small foreign exchange brokerage. We focused on risk management primarily for corporates. And when I started was about 3 weeks after the Brexit referendum. So if you want to be sort of thrown in at the deep end, that was a pretty good way to get used to things.
It was that quick after Brexit. So that was...
Yeah, it was literally
You're getting a lot of phone
afterwards.
calls on the old risk control line.
Yeah, my job was basically a sort of glorified gopher. I can't really remember what the official business card title was at the time, but it was basically, we're so damn busy, we need someone to do all the stuff that the senior guys don't want to do. And as an 18-year-old at the time, been sort of surrounded by markets my whole life. My grandfather worked in foreign exchange. My father worked in financial services until he retired a couple of years ago. It was kind of almost a natural fit of, this is something I'm really interested in. It's something I've been surrounded by. It's something I want to do. We were all kind of expecting that things would quieten down relatively quickly in the aftermath of Brexit. Safe to say they did not. So ended up managing a book of clients there for a short while. And then it got to the point where what was really sort of interesting me about the role was not so much the actual execution of trades or risk management or anything like that, but understanding what's driving markets, what's going on, how all of those jigsaw pieces kind of fit together and construct a narrative, not only about what's going on, but also about what might happen going forward. So I moved into the research function there. And then probably about 3.5, 4 years ago, my current boss, Mr. Chris Weston, rings me up and goes, do you want to come and do research at Pepperstone? To which I said, yeah, why not? And that's still where I am. They haven't got sick and tired of me just yet.
Yeah, that's all. And it's interesting because there's so many routes you can go with the trading. When I first started trading, I had this idea that I would be like a very, very short-term trader. And I found these guys that were just monsters at scalping, monsters at everything. And I would always ask them, I'd be like, well, why are you doing it here? And they were kind of like, it's just time to do it. Like, this is where you buy them and you sell them. And that was never good enough for me. Even though they were wildly successful, they were amazing traders. But that's why I floated to the more research / quant kind of way, because it just didn't fit my personality. So it's kind of cool to see how it came together. So
I think one of the other.
Go ahead.
Who's going to interrupt who now?
Well, I think, Nick, just what you said there, like, rings really true for me as well. It's like, remember when I was used to running around on the trading floor and whatnot, there were so many different types of traders, and that's what I love. Like you said, I know some of the guys that I'm still very good friends with now, they're huge gilt and bond traders, your European bonds, and scalping the spreads and stuff like that. And also, then you had longer term traders that were just sticking the stirs. Then you had like the oil guys would come along with it, news event driven. And that's what I kind of think is so good about trading. And this is, I think me and you, Nick, have actually spoke about this in the past. So if it's going on off on a bit of a tandem, I think it's quite important for people listening, especially new traders and whatnot. It's very easy to fall, like if you're coming into starting trading, it's very easy to listen to one person and believe that that's how you've got to trade. And I think it's very important for especially new traders to realize that there are multiple ways to earn a living trading, multiple styles of trading. And it's really important that you find the style of trading that suits your personality. So I think so many people fall into the trap, like you said, when you first started, you're looking at scalpers. Now you were, thankfully, you made the correct decision that actually scalping isn't for me. But some people might think that scalping is the only way to make money. And that's when you will not make money if you're being forced. Well, you know what I mean? If you're forced to kind of adopt a trading strategy that doesn't suit your personality, I don't think you will ever win. So
well, the other thing with that is when you do find a trading strategy that works and that suits your personality, don't let anyone change your mind. Stick with it. If you've got, the number of clients I speak to, and for example, over the last couple of weeks, these big moves that we've seen in gold and silver, and we're chatting things through, and they've got a strategy that as to how they trade, whether it's based on momentum indicators or whatever it might be. If that works for them, I'm not going to sit there and try and change their mind, even though I think 99% of technical analysis is complete bollocks. I'm not going to sit there and go, please don't do this, do what I tell you to do. If you've got something that works, stick to it. Keep going.
Exactly that.
No, and I 100% agree. And my last interview was with our business partner, Jimmy Jude. And he's a fantastic, he has a feel for markets, but he makes me cringe a little bit when he says like, oh, this is the B wave or whatever, it hurts my soul a little bit every time he says it. But he ends up being right like most of the time, so I can't fault him on that.
Also, he has got lovely hair.
Can we not with the hair, please? It's a sensitive subject around here.
Yeah, I could be your dad and I have more hair than you.
Oh, God. The worrying thing is Ryan could technically be my father as well.
Yeah, we discovered
we're the same age. We're the same age. So, all right. Well, let's switch it back to the news source, right? And I have two excellent news people here. You guys are always on top of the news. You're always on top of it. What type of news is actually genuine and that you can act on, like versus like the noise of Twitter? There's all kinds of news coming out all the time, but there are certain headlines that are actually going to change positions. They're going to change what is in the market. What are you looking for on that, and how do you avoid getting into the noise discussion?
Who wants to take that?
Well, you're the fella who's running a news aggregation platform, I was kind of hoping you might.
Right.
Can I actually say something first before you go on your spiel? I think just zooming out a little bit, I think it's important, especially for new traders or retail traders or whatever they might be. It's actually really hard to trade news because 99 times out of 100, you're not going to be getting that headline first. And by the time you've got it, understood what's going on, looked at what's moved, you're probably just liquidity for someone else to get out of a position that they put on as soon as the headline broke. So I'm slightly contradicting what I just said here, where if you've got a trading strategy that works, I'm not going to try and change it. But if you're going to try and trade news as a retail trader, you are making life a little bit more difficult for yourself than it has to be, if I'm honest.
So to follow on exactly from where Michael is talking about, I can vouch for this completely. I won't name names for firms because it's not fair to them. But I know intimately a firm that conducted a kind of an audit on their traders to see where they were making money. Basically, were they making it on technicals, were they making it on this, that, the other? And they discovered that they were only making money on big headlines, and then they were basically giving it back on when they were technical trading or breakouts and whatnot. So they basically brought in a rule that you could only trade news headlines. Now, one thing, which is all great in saying that, but they've got direct market access, they've got Bloomberg terminal, they've got Reuters terminal. There's a room of a dozen of them all staring at different terminals and staring. As soon as one sees it, they'll shout it out. They've even got the keyboards, they've got the magic keyboards set up with like, risk on, risk off, Middle East blowing up button, which just buys all oil, obviously, and whatnot. Those people are reacting within a second, if that, to news. And that's before the algos come in, because this was about getting on for about 10 years ago when they started doing this. So these guys were massively ahead of the curve even then. Now, as Michael said, it's okay now, you can see a headline drop on Twitter. Yes, you might get in before most other people sometime. But the problem that traders have is they'll see a headline, a big headline. Yeah, the worst thing you can do is try and trade minor headlines because you'll just end up just dropping, like you're just like losing money every time, small amounts. The worst thing you can do as a trader is hit a headline, do well, because then you'll think that you're a headline trading god. And I promise you, unless you've been doing this a long time, unless you've got direct market access, unless you are the fastest finger, and again, this is before we got headline reading algos, which do have their pitfalls. But I do not believe that a retail trader can have a strategy of just trading news.
No.
I see there's a lot of survivorship bias where they'll have a good run on some big headlines, but then they'll give it back on mediocre headlines. And that's the problem. Because there's so much news coming down the pipe these days, especially with the likes of Twitter. Twitter used well is an invaluable source. I actually would say you can't really be in markets these days without being on Twitter,
definitely not,
or without reading Twitter. The problem is, there's so much noise. Now, it's impossible to say, like on the show now, that headlines is one you should trade. You need to be really involved in the markets. You need to be, you can't have a day off really from reading news. So you need to know, is that a new headline or is it a regurgitated headline? Because we see a lot of that these days as well, where literally Bloomberg will say a headline one way, Reuters are printing it another way, then it'll be regurgitated somewhere else an hour later. Now,
well, to be fair, the person who usually says it changes his mind every once in a while.
This is
Well,
it.
there is that as well. Yeah.
This is it. So I think if you are looking to trade news, you need to have reliable sources, and that's when a shameless plug. That's what we're doing at PiQ.
Yeah.
All vetted sources and whatnot. But you need to stay on top of it. And unless you're prepared to stare at a computer or stare at a screen for 12 hours a day and watch every headline come down the pipe and then like mentally follow that story, I don't think you've got a chance of trading news, because you will get sucked into trading minor headlines, and that's how you give all your money back.
But I think even if you're not actively trying to trade news, you still need to be on top of the headlines.
Absolutely.
So you can follow the narratives and you can follow the dynamic. And as you rightly say, the only way to do that is to sit there and watch it play out. Whatever you're trading, whether it be equities, rates, FX. Well, FX hasn't gone anywhere for months, so maybe not that. But you've got to watch the price action play out. You've got to watch the headlines play out. You will build over time that innate sense of that's important, that's not important. It's not just a case that President Trump has put something out on Truth Social, or BOE Governor Andrew Bailey has said something and here's a big red headline. You need to understand the dynamic, what's already been said. Is that fresh information that we've now got to discount, or is that something that they've been saying for the last 6 months and actually we priced it in ages ago? Is it pertinent to a narrative that we're currently looking at? There's all these questions you kind of got to ask yourself when you see a headline, that the only way you can actually effectively answer them is to literally just be sat at your desk all day.
And this is the thing, right? And like, as Michael was, you're all three of us know, right? Probably 0.1% of the headlines that hit the things are worth looking at and worth trading. But you need to know what the market is doing. You need to, some of the best traders I know that have been in this game a long time, and I'm fortunate enough to call some very good friends, very, very hugely successful traders. One of them springs to mind where a bit of news can come out. He will know what that did to, well, back then, Euribor, short sterling. Similar piece of news 5 years ago. He'll know what bit of the curve moved. Just like it's like some random form of autism. Obviously, like counting mathematics and stuff. But you need to understand what a headline will do. And I think a great case in point is, and funny enough, me and Michael have mentioned this a couple of times on the Morning Blast, and I actually put an article about it on Twitter. One thing that really pissed me off is when anything to do with Iran, or say there's a strike on Iran, when they blew the nuclear facilities a little while back. The people that don't really know what they're talking about but have a bit of a following, will claim that instantly means $100 oil. Now, that week when they did blow up the nuclear plants was it June, July? Crude actually closed down on the week, that following week.
Yeah.
On Saturday, Sunday, and crude actually closed lower on the following Friday. And it's so frustrating to see people get sucked into people that talk nonsense. And this is why I think as well, it's why we, there's a group of us obviously on Twitter, or FinTwit, whatever you want to call it, us three, Jimmy, and a load of other people. We all kind of gravitate towards each other because we've all got a huge dislike for bullshit. And I think that's, it brings us all together.
But I think this is where Twitter is kind of or X, can we just call it Twitter, is both a kind of a blessing and a curse, where it's a blessing because, literally since day one on the sales floor back in the day, I've had TweetDeck open on my computer and I don't think I've ever shut it, no matter where I've been working, which is, it's pivotal for getting information quickly. but it's also a curse because absolutely anyone anywhere can have a platform. And the amount of nonsense that gets amplified because it goes well, yeah, quite. But it goes back to that old thing around bad news sells, bad news gets you clicks, bad news gets you views, hyperbole, hysteria. If you put out something saying the S&P is probably going to rally 10% a year for the next decade, no one will bother looking at it. If you say the S&P is going to crash 10% in the next hour, you'll go viral and probably get £1 million from Elon Musk for doing so.
I'll tell you a great one. Standard Chartered, right? Standard Chartered,
Oh,
huge.
no, don't.
You know what I'm going to say with it. So Standard Chartered for the last 5 years will put out every quarter they'll put out a Bitcoin prediction, and it's always about $250,000, right? They're only doing that because if they do, they get put up on Bloomberg, they get put on like Reuters, they get put on CNBC. Everyone reposts it. It's just a PR exercise. And Michael, working on the sell side, he knows more than anyone. That's the only reason he does his pieces.
Well, yes, I set slightly more rational price targets, like 0.
So just using me as an example, I trade a lot of news, but I also have I have 15 macro markets that I trade, and like you said, I know those markets. I know what moves them. I've done the studying, and I am looking at my computer 12 hours a day, so that's easy for me. You know what I mean? But the thing that I trade news is I specifically get my ideas on paper. I write every morning. I write it all out, and then I look to see if I can catch one of those things like Iran bombs, oil spikes. I can sell into that because I know the history of oil. One of the largest studies I've ever done personally, it took me a couple months, but I studied every single oil move into like a war event. And I waited for Ukraine. And when Ukraine happened, when we spiked to 120, I have shorted oil like every single time, I mean, and that history is there for people to see. So it's like so you're sort of counter trading. And as we switch more to algos, we can see these exaggerated moves that are happening in all the asset markets because the computers just hit it, and they know the pressure points, they know where to hit it, and when they hit it, they don't care if it's right or wrong. So we can get these insane price moves. So if you're on top of the news, you can fade it. You just have to be smart, you have to fade it, and you have to use the news over like the long run to do that,
No, I think you're exactly right. Funny enough, it was there was what was it? It was a few months back. There was something kicked off. I think it was regarding the Suez Canal or something. And woke up. Checked in the Globex Open on Sunday night. Crude had spiked like $5. To me, it was just the most obvious sell going. Everyone else on Twitter was saying, "Oh, here we go, $100 oil again." Went back to sleep. Small size. Where I only had a little punt on my old PA, and came back in. I think by the time I woke up, or by the time I had to do the morning blast, I think we were basically off another $4 or something stupid like that. And you're exactly right. And I think because of how much, how many retail traders are in the market now, and how liquidity's never been higher, right? So we will get those extended moves. And I think because of leveraged trading as well, like that, there's a lot of people get stopped, and there's a lot of, we always seem down to this is another thing that annoyed me the other day when gold got sold off quite hard. Well, obviously got murdered basically. People claiming.
I was going to say that was a slight understatement, hadn't he?
But
just a little bit of a wobble, wasn't it? Nothing major.
Out. Everyone's going, "Oh my god, this is a once in like a 25,000 year event." It's like, no, that's not how the distribution works. And I think we only get more moves like that as there's so many more participants in the market. So I think it's a great time to be a trader now and get into markets because there's a lot going on in the world and markets have never been more accessible.
Yeah, for sure. Okay, let's switch it a little bit, and then like both of you guys are obviously European. Obviously, I said at the beginning
is
that
this where I get called a communist?
No, not yet. We'll save that to the end. But obviously, like I said, I talked to a lot of Europeans just simply because I'm the only one up in the United States, it appears, at that time. So I talked to you guys. But you guys have Europeans have an excellent feel for markets. You guys have the best time. You trade a lot of U.S. markets. You trade your own markets. So you guys kind of have you're in a good middle ground to trade more markets more actively, and it's kind of interesting. I'm curious as to what markets you guys focus on. Are you focused at home? Do you focus on the U.S.? Or do you have a more diversified portfolio? Or like what What are you doing that you think is different than someone over on my side of the on the pond?
I mean, I guess the obvious answer to that is we'll focus more on European assets than you guys would. I can't imagine there's many people in the US who care what the gilt market is doing, whereas it seems to be well, I was going to say it seems to be a sort of preoccupation of mine at this point, given the state of the fiscal matters. But yeah, I think that is probably the benefit of being in London, and I think that's why the city of London is what it is, primarily because of location. You know, as you rightly say, you're up at sort of 4 or 5 o'clock in the morning. Well, Ryan's not. Most people are. Ryan's getting in at 4 or 5 o'clock in the morning. Most people are getting up, and you get the sort of the back end of the Asia session in Hong Kong and in Tokyo, and then you've got, you know, the US cash close is 9 o'clock in the evening here, so that's very, very easy to cover. So I think it gives you a much kind of broader perspective as to what's going on, which actually helps you to kind of knit things together. So to use that example of gilts, you know, obviously markets are worried about the political backdrop here in the UK. Is Starmer going to stay? Is, you know, some sort of left-wing replacement going to come in for him? But having that broader perspective, having an understanding of gilts, having a focus on treasuries, bonds, BTPs, whatever else it may be, allows you to know, you know, is this a broader sell-off in government debt, or is this concentrated solely to the UK? And if you're focused only on a really narrow range of assets, you kind of miss that broader context, which is actually really useful in not only explaining what you're seeing, but also spotting divergences and, as a result, opportunities as well.
I think it's like it's the biggest. Everyone that knows me knows I love a fucking cliche for markets, but one of the biggest ones and one of the most truthful cliches is "if in doubt, zoom out." And I think it sounds bizarre, but I think just purely being in Europe or being in London for us, it kind of makes us do that, because as Michael said, we're straddling the perfect kind of time zone for markets, because we're catching the end of the Asian session, so we can see what's going on there. We can see, obviously, you've got the European session, obviously, but we can actually follow almost like the life cycle of the full US trading session from, like, you know, hours before pre-open to the cash open. And if you're staying at your desk and you're not in the pub, till the close. And I think
why did you look at me when you said that?
I don't know. I was actually looking at myself. But like Michael said, I think it really sounds bizarre, and it shouldn't really matter too much. But I think it really does give us. We're very kind of. What's the best way to do it? We're in a very advantageous position, because we can kind of follow that life cycle of the trading day. Because then we see it sometimes, you're up as early as me, Nick, but we can see other Americans like on Twitter literally come into their desk, and you can start seeing the pick up. You can start seeing the conversations start picking up on Twitter, and sometimes, me and Michael might have been watching the markets for the past 6 hours, and also you see people coming in acting surprised that this has happened, that's happened, and we already almost have a head start on them, because we followed that story that's been developing all morning, or that price action that's been developing all morning. And it's one of those things that I guess, Michael, it's the same for you, but you kind of don't even realize you're doing it. It's just almost a natural thing. I know when I go on, if I go away to the US, when I was in Vegas in October, it was so awkward trying to follow markets. But I was like, how do you do it? Like, it just doesn't make sense. But like,
And also the number of times that, you sit there and you're sat at the desk and you kind of go, well, let's just see what happens when the Americans arrive.
Yeah.
How are markets going to react? For example, you've had a really brutal risk-averse session during Asia. Things are kind of consolidated in Europe. The question then is, it gets to kind of lunchtime here. Desks in New York, Florida, wherever are starting to open up. Are we going to see a bounce continue? Are we going to see a renewed round of risk aversion come in? So like Ryan says, it kind of allows you to follow that whole narrative of basically a full trading day, just by getting up at a reasonable time and going to bed at a normal time, purely by virtue of where we are, basically.
Yeah, and as you said, I do get that's the kind of the reason why London is such a financial powerhouse. Okay, the London Stock Exchange maybe not so much, but in terms of positioning, you are we are in the best place in the world to gather as much information as possible, and I really do think it's advantageous. Don't get me wrong, I'd prefer the Florida weather, but there we go.
It's a bit warm over there.
So obviously, you guys do the morning show, and I'm always super mad at you if you don't do it, because that's my excuse to sit down and not go to the computer yet.
Can I just say, it's 9 times, actually no, 10 times out of 10, if we don't do it, it's his fault, not mine.
because then I wake up and then I have to go to the computer a half hour earlier. You guys are my excuse. You guys are my excuse to eat my breakfast and listen to the morning show and maybe go for a walk to wake up. But if you're not there, then I'm all sad and I have to go up and work early. So,
I see the emotional toll that we're impacting on people here.
But on a more serious note, how did you two get together? Obviously, there's a big age discrepancy here, you know, and we got Ryan, who's old like me, and then we got Mr. Brown, who's obviously a younger Gen Z type guy. So, you know, where we go from there.
Well, I think anyone who's ever met either of us would agree that, you know, physically the age difference is that way round, but mentally it's very much the other way round. You know, the number of times...
I would freely admit that.
Yeah, I think Ryan acts much more like a 20-year-old. I act much more like about a 65-year-old these days. But we met years ago, well before COVID, through Twitter, effectively.
Yeah.
And actually, we've both met a number of sort of fellow London-based market participants or people who've been in London and are market participants through Twitter as a sort of real life network. Because I think one of the things that we quite often say when we sort of tell this story is, you know, neither of us are any different on the internet as we are in person, because neither of us can actually be bothered to sort of maintain an alter ego or anything like that. So, you know, what you see is what you get. And inevitably, if you've ever been in the city of London and you've spoken to anyone for more than about half an hour, the conversation will very quickly become, should we grab a pint at some point when I'm next in town? And that's basically what happened. And, you know, I've been stuck looking after him ever since.
He is my carer, basically. But no, but Michael's spot on. I think because you know, as traders now, you're basically forced to spend so much time on Twitter. You end up just, you know, finding people whose views you like, or, you know, whose opinions you respect, because you can kind of sense if they are full of bullshit. And you know, and this, like same with the three of us, like we're all very anti that, which is why we all kind of gravitated together. And obviously, it's just fortunate that me and Mike were both London based, so it was like, should we grab a pint? And best day of Michael's life.
Not sure about that, but not sure what that says about the rest of the days I've had in my life, to be honest.
Oh, how depressed are you now?
All right. So I have like a little section here, and like it's not meant to be like super serious. It's actually kind of just.
Has any of this been serious so far?
Yeah, I mean, I don't know, a little bit, I guess, right? But one thing I think that when I talked to Jimmy, I actually talked to Andy. One of the ways to spot sort of a fake trader online or a fake news source is one that just takes themselves too seriously. You know what I mean? Like they're always serious. They always know the answer. They're never wrong. They're never laughing at themselves. You know, to be a trader, you have to have somewhat of a self-deprecating dark humor. You know, you have to really be able to chill out. It's one of the only businesses where you're almost wrong as much as you're right, you know, probably wrong more. And it's something you have to get accustomed to. So like you have the banter online, you have the thing, and it's a way to de-stress. But do you think that's important, and do you think that it's actually something that you have to develop, a sort of a self-deprecating sense of self-worth? Absolutely. Or whatever?
Yeah, 100%.
Completely. I don't know, you know, again, because of my background from like real trading floors as opposed to just like talking to people online. I'm still, you know, fortunate enough to, you know, a lot of those big brokers, a lot of those big traders are still very good friends of mine. Not one of them takes themselves too seriously. All of them self-deprecated. Yeah, and it's, you need to do it because you need to have that armor to basically be able to laugh at yourself. You know, you need to be, you know, again, you need to know when you're wrong. As in trading in general, one of the biggest strengths you can have as a trader is to know when you're wrong. Otherwise, you know, you will not make it. I think that's, you know, and that's that whole mindset. And I think that's why, you know, and again, you're exactly right. One of the biggest red flags for me, well, two big red flags, I'm not joking, and this is going to sound like I'm joking. Two biggest red flags for me: one, take themselves far too seriously, and they're never online. Two, if they live in London and they turn me down for a beer 3 times on the spin, I know they're absolutely.
If only I'd have known it was that easy to have got rid of you. Oh.
No, because it's happened before.
3 beers. 3 beers is where it's cut. This is where it's cut.
Yeah, and like jokes aside, it's like there's been people. It's like, oh yeah, no, I'll come out for beer. And I'm like, okay, well we're in the city now. Oh, I can't do it now. And it turns out, fast forward a year or two, they've blown out, or it turns out it's absolute bullshit. But again, I think it's an art, and I think you only find out who is a charlatan by spending as much time on Twitter or whatever is possible. And it's important, especially as it kind of circles back around to what we said at the very start of the show. You need to understand who to follow, because otherwise there's so many snake oil salesmen out there, so many bullshit merchants out there. If you fall into that crowd, it's almost like it's a doom loop where everyone, like that ICT lot, the guy behind ICT claims that he was kidnapped by market makers and shown the source code for trading. It's like, what are you on? He's got 1 million followers on YouTube and all this, and like, what?
But I do think people being kidnapped aside, I do. There's a line I never thought I'd say on a podcast. I do. Jesus, I do think that the humour aspect is super important, whether it be online or even on a floor in an office. Obviously, things now are nowhere near like they were when Ryan started, or even 20 years before that on the floor. Yeah. But the sort of core of the matter is still the same. You're sat at a trading desk for 12, 14, maybe more, depending on what's going on, hours a day with a relatively small group of people who ultimately you're going to see them more than your family. And it's the same in terms of the market contacts and the mates you build up doing this job. If you can't get on with them, if you can't have a laugh while you're doing it, then frankly you're not going to last, because people are either going to get bored of you, or you're going to end up having some sort of breakdown, I think.
Well, look, I've got a good sense of humour, and I've had a couple. But no, but you need to be able to laugh at it. You need to be able to take, because there's also this. It's a very, very tough job, right? You will have dark periods. And unless you can find a way to deal with that, and this kind of loops background to what I start about, your mindfulness and about the mental health aspect. It's a very dark and lonely place being a trader, especially if you're not on a trading floor with other people. If you're sitting at home or whatever, you can kind of get locked in, and and that's why I'm always I say it every few months I put out a tweet or whatever saying that if anyone does need a talk on DM, or if you're in London at Pints, I'm all in. Because it is a really bad place to be if you aren't willing to kind of open up and just be yourself. And I think that's another thing that kind of also again links back with what we said about spotting fakes. You need to be yourself, because if you're trying to keep up this alter ego on top of trying to trade, it's just going to end in tears. And I've seen it in so many times over the last few years, especially since COVID, when there's been more retail traders, the market geniuses. And that's another thing. Especially there's a lot of crypto bros and all that have come into traditional markets now, thinking they're God's gift to traders. All they've done is bought something that's gone up. I mean, everyone's an expert. and then they decide, I can trade normal markets, and they'll go into Forex, which is like the most efficient market in the world. So I would like that be the last thing I'd ever touch. Ironed out, and they can't understand it. I see all the markets against me. It's the market maker.
Yeah. No, I actually know a person who I traded with once, and he was just printing money, and I was so jealous, because we were in the same little group, and this guy, I mean, he probably made $1 million in 6 months, and I couldn't believe it. I was like, this guy he was trading falling wedges patterns and stuff, and it just was working because it was a bull market, and I was like, and he's got long since blown up 10 times, and now it's all gone, But it's just the market can reward bad behavior for such a long time. You know what I mean?
That gives people a sort of false confidence, doesn't it? Because I think you just said, Ryan, in a bull market, everyone's a genius. You just buy everything because it's going up. And if you are profitable based on a strategy, the strategy may not be sound at all. It's just sort of pure luck and fluke that, you're long stocks in a decade-long bull market. Well, it's actually going to be more of an achievement if you fail to make money in that sort of environment. It's when the tide turns, or when you see a market almost like the market we see now, where the S&P's basically gone nowhere since October last year. That's when the question is, okay, well, now is your strategy going to work? Because the dynamic has changed. Can you either apply the strategy you've got to the new dynamic, or the shifted dynamic, or can you find another strategy that works? Because if you can't do either, you're again not going to last very long at doing this.
Exactly that. I liken it, and fair enough. Again, it's another country I roll out every now and again. It's almost like if a poker player, if you're brand new to poker, and you win a tournament, or you win a hand, or you win a lot of money on 7-2 offsuit, you're gonna if you're a novice trader, you win on a shit hand, you fall. There's a massive danger that you now believe that 7-2 is a good hand, and you see it with traders. They'll luck into a good like opening 6 months or whatever, over leveraged. The market goes 2%, and they're like blowing up their accounts all of a sudden because if that happens, then you're definitely over leveraged. But they win on bad strategies because they've been lucky for a certain period of time, and you do need luck. But you need to know when you're lucky and when it's been a good trade, and there is a difference. But then when their luck runs out and they're trying to trade on bad ideas or bad strategy or bad discipline, that's when the tide goes out and you see you swimming naked, and that's what we're seeing now. And funny enough, I think Nick, me and you, I think this must have been a year or so ago. There was a big move in the S&P, and people were losing their minds. And I think Nick, I'm sure it's probably a bit longer than that. It's probably a few years ago. And I remember you tweeted like, if you're losing sleep over this 3% move, or if you're blowing up your account on a 3% move, you've obviously got far too much size on. But that shouldn't ruin your account. But you see it, people are blowing up accounts over 3% moves. If that's the case, then you really do not want to be trading that size.
So just my curiosity, because obviously I am I guess a retail trader. Obviously, I'm a retail trader. And then, but you, Mr. Brown, obviously you're more on the sell side. You talk to a lot of professionals. How is that difference versus talking to like a retail trader? And when you're doing that, like, it still seems like your account you share the news to everybody, but obviously you have a very serious job underneath. So how is it managing those two things?
Do I?
I don't know. I guess. I'm asking. I think so. I mean, at least you should fake it now for Pepperstone. If not,
no, I do have a serious job, and it does pay the bills. So I best at least pretend that I have one. But no, I mean, again, I think actually, to be honest, there's not really that much difference between the stuff I talk about on the internet, whether it be Twitter or LinkedIn, and the stuff I'll talk about with clients, because it comes back to that point earlier. I'm not. I can't be bothered to have two sort of separate personalities, one for the internet and one for clients. What you see is what you get ultimately. But I think there is a degree, obviously, from a client perspective, we're tailoring what we do to the client. If we've got someone who only trades commodities, then there's literally no point in me giving them an overview of where equities are trading, because they're not going to care. They're not going to put a position on the back of it. There's literally no benefit for anyone. We're just sort of wasting time. But yeah, I think there's actually very little difference between any of the content we put out publicly and anything we might be doing sort of behind closed doors. I think fundamentally we're looking at the same markets, the same news, and the view is going to be the same no matter what the audience is, really.
Yeah. Super random thought, but actually, Jimmy, natural gas trader. We got Ryan, natural gas trader. Clearly, my friends are psychopaths, So I think that might.
I'm glad you said that.
So I think that might be a sign that there might be something seriously wrong with me.
I've never traded nat gas, if it helps, and I never will.
Psychopath. I just want to, because you mentioned just now about you said, well, technically, I guess I'm a retail trader. I think this is something that I've kind of been speaking to a number of people about actually recently. Before COVID, there was a very serious definition between professional traders and retail traders. And back then, basically, retail traders basically get their crayons out, draw on charts. But then we had COVID, and obviously then a number of people got locked into markets, and the rate of education and the market IQ for retail traders, the average is going up so fast because there's so much information out there for retail traders that I wouldn't consider you a retail trader. You're far more advanced than that, but you're not, maybe you're not direct market access or whatever. So I think there needs to be a kind of a bit of a rethink with, just generally. We talk about retail flow and like professional flow or real money flows or whatnot. But, so many retail traders now are in fact just very, very good professional traders. And it almost feels like sometimes, I normally, if I'm on a meeting with, a broker or whatever, I always adopt the term, so advanced retail traders or, independent traders, because I think it's more honest to what they are. Because, if it feels a bit disrespectful to call people like you a retail trader, because to me, people like you and people like that ilk definitely aren't. Because you're putting in so much effort. You're putting in as much effort as a professional working in a bank.
Well, I think that's the thing, isn't it? Almost the whole retail thing is almost used as a bit of a slur, effectively, of basically flow that's always in the wrong direction. 9 times out of 10, it's wrong. It's people who don't really know what they're doing, and you're absolutely right. Even from the guys I'll talk to on a day-to-day basis, these are people who trading is their job. They are doing this effectively as a profession. This is how they earn their income. This is their 9 to 5 ultimately, and they are putting in the work to reflect that. And obviously you're doing that as well, Nick. So yeah, I do think that the whole thing around, are you a retail trader? I don't think it. And I'm not talking my own book here, as much as it sounds like I will be. But I don't think there's actually a negative connotation associated with being a retail trader anymore, because people are putting in hours and hours worth of work, building the strategies, back testing the strategies, arguably doing more work than some people who are doing this professionally, I would argue.
Yeah, well, I'll tell you what, straight off the bat, I think of like Nick's daily report he puts out before the market opens. I mean, Jesus Christ, that's like institutional level stuff that I'm assuming that everyone's listening to us also follows Nick on Twitter. You should be, but I mean, like,
you're missing out.
It's institutional level kind of insights and stuff. So I think, I never want to hear you to call yourself just a mere retail broker again, because I'll come over there and beat you up.
Can I come as well? I'd love to watch you try and beat up a former UFC fighter.
No, there'll be a lot of people coming to watch.
So this is a good transition, because we talked about dark sense of humor. We talked about not taking yourself seriously, but there's always this draw to be negative, like to say like, oh, this market's been going up too long, to become that perma bear. And a perma bear is essentially just someone that blew up trading that's frustrated and eventually like has to take it out on everybody else, But obviously risk control, like we said, a 3% drawdown shouldn't cut you down. Like, how do you guys think you should manage that when it comes to like having a cool head, not getting caught up in the FOMO, but also understanding the inflation dynamics, understanding people have to put money somewhere, and understanding that markets generally rise, And as long as you can not blow up and stay in the game long enough, that's how you can be really successful. How do you think that, like, you've avoided that sort of doom loop that a lot of people transition into?
Well, I think...
Sorry, Michael, you go first.
I was going to say, I think there's a few sort of moving parts to that. I think the first thing is, at any given time, if you ask me to, you say to me, why might markets fall? I'll give you 1,000 reasons. But the market's probably discounted 999 of them already. I think one of the most important things is what we so often say, which is about zooming out. As we always talk about, over time, generally speaking, equities will go up and to the right. Whether that be a year where they gain 20% or a year where they gain 2%, over time, the return tends to be positive. So if you're sat there going, actually, I'm becoming a little bit more pessimistic about the market's fortunes over a longer run basis. I'm not saying, tactical shorts, intraday, intra-week, that's a completely different ballgame. But, if you're thinking of a structural bear market or a structural bearish view, you're fighting, firstly, history. And I know past performance isn't a reliable predictor of gains or whatever the saying is, but ultimately that is the way the market goes. It has that positive drift because, frankly, as the economy grows, so does the market. That's generally the way these things work. And the second is you're fighting a ridiculous weight of capital that's coming into the market, as you said, that's kind of got to find a home somewhere. And although yields have obviously picked up over the last 3 or 4 years, equities are still really the best place to be putting your money to work for the majority of people. You're also fighting, ultimately, institutions. And I don't mean banks. I'm not saying banks from the other side of your order. What I'm saying here is the Fed, who want to preserve the wealth effect, as we know, and also the administration. I mean, you've got Trump running around saying that the Dow is at 50 or the Dow's hit 30 record highs this year. Like, this is his yardstick for success. And you want to basically fight against a president that wants to underpin asset prices.
Yeah. Someone asked me, they're like, how could you, because I bought the dip in some of these software names, I bought the dip in some of the things that I thought were of value. And they're like, how can you buy here? And I was like, they just had that hearing for the Epstein, the ladies yelling about the Dow at 50K. I'm like, take the signal, guys. Like, what do these people care about?
Yeah.
The White House are literally they're literally tweeting from their social media account how many all-time highs we've had this year, and you're bearish. Like, what? But like Michael said, like, for me personally, anyone that knows me knows that I'm always, the optimist, and I just, I like to have, I don't, hate the like dark and dingy thoughts and stuff. And I think if you can have that open mind, I'm not saying I'm always bullish in the face of, COVID smash or whatever like that. But overall, like Michael said, my attitude is that markets, capitalism will win. So I'm very happy to kind of take, like, I was looking to buy the dip and whatnot, which so far so good. But in terms of, again, find it back to your kind of like what was before about that dark union stuff. I would rather sit there, have a good time, have a laugh. If something's going wrong, have a laugh at it. Some of these people that just literally spend every day. Like, a few people spring to mind. I think you all know who we're kind of talking about here. Like, few people understand what's about to happen, or well, this is going, and like mate. Like, there's like one guy over, I don't know, people might not know who this is, but I think Michael will do. There was one guy that was basically calling for like the Dow or the S&P to like come off like 80%. He was like stocking up on spam in his like cellar in his house. And like genuinely he was boasting about buying lots of spam and thin goods. And lo and behold, we bounced, and then he quit trading.
Do you know the best bit of that story? Sorry, we won't say his name, but the best bit of this, he was in the Daily Mail with his tins of spam. He's got a basement full of it, and then there's just a line at the bottom of it that says ABC name does not even like spam. What the hell are you doing, man? Why have you bought so much of it, man?
This is it. I think
the other point I would go on, Ryan.
No, go on.
I was going to say, the other point I would make on this is, again, there's reasons why you're bullish. So, for example, with for the last year or so, I've been sat here going, the US economy is doing all right, growing at a decent clip, actually a very impressive clip. Earnings growth is doing the same thing. You've got tailwinds from the monetary side, you've got tailwinds from the fiscal side. So the way that I tend to look at markets is, if we see things have a bit of a wobble, like the software sector has recently, or if we see, a period where we just kind of go nowhere, go back to those principles. Have any of those changed? No.
Yeah.
So if they haven't changed, then your bull case is still intact, and actually you should still be arguing that these are dips to be buying and the path of least resistance is higher. If those factors, sorry Ryan, just quickly, if those factors begin to change, if, for example, we saw the labour market rolling over, or if we saw the Fed, I'm not saying they're going to do this, but adopt a much tighter monetary stance, then you reassess your view. And I think that's just as important as having a view in the first place, is not getting married to that view. I've had the same view for about, 9 months now, just in the aftermath of the China U-turn. But if those factors change, then you change your mind. That's just how markets work. You own up, you say, look, this was the view, this is what's changed, this is the view now. And that's just how we have to operate. Nothing is fixed in this game.
Yeah, absolutely. And I was like, again, another cliche. Markets, again, this is just my opinion, obviously, but it's something that me and Michael have said many times on our podcast and whatever. Markets need reasons to come off, get sold, right? And they need increasingly bigger reasons to continue to come off. Markets really don't need a reason to go up. When you've got passive flows and all this money coming into the market, the markets really genuinely don't need a reason to go up. They can grind higher on nothing. But if we're getting prolonged sell-offs, it needs to be a bigger story, more bearish stories, or else the market will go sideways and that will drift back down. You literally need like a fire hose of shit news to keep aiming at the market for it to have any prolonged sell-off. And that's not me just saying that. You look at any chart, you look at where we are again, up and to the right. Look at over COVID. As soon as people started kind of going, well, hang on, we're now pricing in the recovery. We weren't. It's easy to look back at the COVID times and think that, oh God, the stock market got hammered. We were down there for a long period of time. I crashed.
You're being hacked by the.
You must have said something that the government here don't like, mate. They've infiltrated.
Anyway, basically, stay positive and just keep buying dips. Basically, there you go.
Yeah. So this is an interview. Isn't about me, but one of the things that I don't do now is I really don't try to short stocks. And that's not because I ever got hurt. My two biggest trades ever were being short into Vol Apocalypse and being short onto COVID. And so those were wildly successful, right? But when we hit the bottom in COVID, I actually bought the dip, but then I shorted the rip, right? And then I got stuck in this doom loop of There's people dying in the streets. These things are happening. And you actually, if you have a short position on, I don't care who you are, you will wake up and hope for bad news. You will. You know,
Exactly.
like you can't help it. You will wake up and hope something bad is happening. If I'm long oil, there is a small piece of me that says, I hope a bomb goes off somewhere. I don't like that feeling. So I essentially like just stopped doing it because I didn't want to wake up like that. You know what I mean? And when I stopped that, now I focus more on where are the levels where we're going to turn? What are we going to do? And I became a better trader, even though those were my 2 largest trades ever. And essentially I'm very good at shorting stocks because I'm able to time it, but I just cut it out from my life just because it made my life worse and the money wasn't worth it. So that's just me personally, but that's the kind of how I stay out of that sort of
The other thing
myself.
The other thing with
sorry, I think
was gonna say-
go on.
yes, if your internet worked, this wouldn't be happening. The other thing with being short is you've got massively.
We're not that short. Me and Nick aren't that short.
I'm not. I'm talking about
Don't
market.
compare me to you. You're like an actual midget.
Also, I'm not going to slag him off. He beat me up. When you're short equities, the risk reward is naturally asymmetric because you're limiting your upside to 100%, whereas your downside could be, well, essentially infinite, basically, until you stop paying your margin calls. So that's something else that people don't think about in terms of the mechanics. And of course, you're paying the borrow on the stock as well.
Also, like Nick said, and the thing is, this is one of the reasons why, in my opinion, all these perma bears and that, why they're always so angry and why they always come across as so depressed is because they're literally every day, every waking hour, expecting the arse to fall out the world. So their literal lives, their life revolves around calamity. Now, that's no way to live your life, and it does mean you miss out on all the gains on any positive news or any positivity. So, Nick, I'm with you on that one. I think it's just an awful existence to have, just in life in general. Like, constantly hoping for the worst to happen is not going to serve you very well.
No.
All right. So let's end it with this one. Obviously, there's more retail traders. There's more information than there's ever been. We have AI, we have algos and stuff. In a world of oversaturation in the market, right? Like how with the news, how with PiQ, how is like the trading going to evolve, or is there just too much information now? And do you think the edge will disappear? Or do you think it's going to expand? I'll answer what I think after that. But do you think the edge with AI, with more information, that's going to go away, and we're going to go to a more efficient market, or do you think we're going to head in the other direction?
My take is that I think there's always still going to be opportunities on trading news and on information trading and whatnot. My opinion is that for successful traders, a new edge will develop, which will be people's ability to read between the lines, instinctively filter out the noise and just gather the signal. Now that is a very, very good skill to have, and it's quite a rare skill to have. I think it's going to be increasingly needed for people to be able to trade these kind of news cycles and these headlines, and which is why I think for 99% of traders, the best thing they can do is look now for medium to longer term timer horizons when they're trading. For the shorter term timer horizons, especially if you're looking at news and whatnot, unless you've been staring at this for a long period of time, you're not going to be able to come into markets now and trade news and whatnot, because there's just too much information out there, and the markets will be too efficient on this news. So unless you've already developed this skill, I think that barrier to entry to be able to trade headlines, to trade news and macro events is now a lot higher. So anyone coming into trading now, best off looking for the more medium to longer term kind of trading strategies, or just almost kind of more investment kind of side. That's just my take. I don't know what you think, Michael.
Yeah, I would agree with that, actually. I think that's pretty much spot on, which is really annoying. The other thing that I would say, just on a kind of broader level, and again, this is kind of talking against my book as a sell-side strategist. I hope everyone listens to me. But I think as the proliferation of information grows, the average trader should take in less of it. And I don't mean ignore the news. Absolutely do not. What I do mean is do not spend all day reading 15,000 Substack letters or every note that Goldman Sachs research desk has put out over the last week. If you're doing a deep dive into something really specific, like, for example, the software sector that's been battered by these AI worries lately, then yeah, go and read as much as you can about that. You need to get up to speed. And actually, ironically, you can probably use some of these AI tools to help you at that point. But I think as we get to a point where there is just so much research and so much commentary out there, it becomes increasingly important to actually filter and, to coin an English expression, sort the wheat from the chaff, filter out what is actually adding value and what is just noise, and just get rid of the noise. And if that means, you don't listen to the Morning Blast, then so be it. We'd be sorry to see you go.
No. Listen to the Morning Blast, people.
But I think that's really important. There is so much information out there already. This is my job to follow all of the information, and it's a struggle. In 5-10 years' time, it's going to be even more of a struggle. And I think it becomes even more important to have that sort of discerning mind as to, do I need to bother with this, or can I just move on? And that is going to help you have a much more clearer view of what's going on.
Yeah, and the thing is, people might be listening to this saying, "Oh, well, just now they were saying to stare at markets or stay at news all day." We are. There's it's not as simple as just saying, "Oh, don't do this, do that." You do need to build up that process yourself. Like for me, there's only a very select people that I will read their Substacks. I won't read any. Like I literally, if someone posts something that I see online, I'll probably ignore it unless it's from someone that I trust. That way, I'm only reading, say, a couple things a day. The rest of the time, I'm staring at news and whatnot, and working on PiQ. But as a trader, it's like you can have, again, another cliche, paralysis by analysis. You have too much input, you end up don't doing anything because you're bullish here, but you've just read someone's Substack that says actually it's bearish.
You also can't form your own view because you're constantly thinking about everyone else's view, and then you don't have your own opinion on what's going on, which is an even bigger problem.
And then the problem with that is if you lose money, you end up blaming everyone else but yourself. And this is and it's true. Like one thing we have to do as traders is the risk. The risk is ours, right? It's our decision to push the button. It's our decision to buy or sell. One of the easiest things where newer traders specifically can get really annoyed with markets, and that's obviously when you start losing more and more, is by blaming other people. Oh, I lost money because so and so said to buy. Well, if you're just buying something because some guy on the internet said buy it, it's not really funny that you deserve to lose money. There you go.
Well, hey. Well, I think that's a good spot to leave it. And just from me to both of you guys, I enjoy talking to you every morning. I consider you guys my online friends. And then even though I am a little critical of Michael, you give me hope. You do give me hope for the younger generation because I'm an old guy now, and I look at kids and I think wow, this new generation of kids sucks. But obviously, you're an extremely hard worker, and I appreciate you both very much.
Thank you, mate. I guess the future is on my shoulders, so hopefully I live up to that.
All of Gen Z is relying on you. All of UK. They're coming for you. You better defend the homeland and be ready for it.
Nick, thank you so much for
on. All right, guys.
Much love to you.
No, thank you, mate.
All right, talk to you later.